And now it's time for Development Debates. We dig deeper into some of the questions shaping the future and present of China. Today we'll see two Chinese experts debate if land finance should be abolished. The high possibility of a local debt crisis in China has been a concern of many experts and the Chinese media. They are afraid the crisis might cause a recession in the Chinese economy. As precaution, the Auditing Administration recently launched the first audit of Chinese land finance practices. Land transferring fees, or the right to lease government land, are the main concerns that have attracted the public's attention. Land transferring fees of local governments peaked at $600 billion in 2013, which accounted for 150% of their budgets. In the first half of 2013, revenue from selling state-owned land was roughly $300 billion, and 90% of the income was from land transferring fees. The high degree of dependency on land finance has led to discussions among scholars and industry insiders about land finance policies. Zhao Yanjing, the director of the Xiamen Landing Bureau, is a strong supporter of land finance practices. In his opinion, how we define cities and urbanization should be based on the quality of public service. Zhao Yanjing believes that the circulation of capital, including through land finance, is the best way to improve public services and support urbanization. He explains further that in the past, the credit system was quite small. Without a strong central credit system, China had no further option except for land finance to accumulate money for urbanization. Under this system, individuals have no personal property and the government can collect taxes on all properties. Thus, the Chinese government decided to lend communal land to accumulate capital. Zhao Yanjing also indicated that land finance is beneficial for Chinese industries. Local governments sell land at lower prices to factories, which decrease the cost of goods. The low prices increase China's competitiveness are in part due to land finance. Finally, Zhao Yanjing summarized that China can now compete with all developed countries and benefits from globalization due to the positive effects of land finance. Therefore, China should maintain land finance practices. Meanwhile, there are also opponents to these policies. Critiques from iFeng.com show that negative attitudes towards land finance practices. They suggest that land finance should be abolished. The concern comes from the current chaos in the real estate market. Real estate developers like to construct buildings after getting land at low prices. Many local governments also prefer to invest in real estate to increase GDP and work performance. Nonetheless, the demand for real estate cannot meet the high speed of construction. Falling housing prices and empty apartments emerge once individuals are no longer willing to purchase houses. According to the critique, the high dependency on land finance as a source of revenue for local governments is another serious problem. In general, the construction cycle of real estate may be 3 to 5 years. The risk arises when large-scale housing complexes are built and the demand doesn't exist. For real estate developers, it's often too late for them to pull out after realizing demand for houses has decreased. Due in large part to the land financing policies, China developed rapidly in the past. However, problems have also emerged when local governments depended on construction as a source of revenue and ignored the lack of demand for real estate. Overcapacity is a problem China has had trouble dealing with, but now it's clear that they are trying to address it still with reforms to loans.